All right, guys, welcome back to Roxum TV and also welcome back to Gem Crypto. Well, as you can see, I've got a different setup today because I'm not in my usual studio. That's because the studio is taking on a short break because of Easter. Anyways, guys, happy Easter. I hope you guys are having fun during this holiday. But like one thing that doesn't stop is the market. Like geopolitics doesn't pause and crypto definitely does not sleep. Bitcoin operate on a 24/7 basis, and that's why we are still here, and I'm still here breaking down the latest news to you in a most understandable way. So today's another packed show, and honestly, a lot of these stories are well connected. So we are going to do what we're going to do is not just to report the news, we are going to connect the dots and so you can actually understand what's going on behind the headline. So first of all, we have to start with geopolitics. So that being Middle East, because right now the situation is confusing a lot of people. On one side, we have the US increasing pressure on Iran. Like we have the deadlines on 6th of April, which is today, and US is definitely applying more military threats, and there might be a escalation from the US side. I mean, that's so Donald Trump claimed at the very least, okay? But at the same time, ships are also moving again through the Strait of Hormuz. So what's actually happening? Like, is this war getting worse or is it calming down? We are going to break that down clearly and simply, like because this story is directly tied to oil, tied to inflation and global markets. Then we move into something very different, but just as important, which is AI. And this one is a little bit uncomfortable, I would say, like because the question is, are we unknowingly training your own AI replacement? We are seeing a new trend on GitHub where AI is learning directly from how people work, like from your documents, from your messages, from your decisions. So the better, so the better you explain your work, like the easier it is for AI to copy you. So we are going to break down what that means for jobs, and more importantly, what kind of work actually survives in this day and age. Next, we talk about social media. And if you use X or Twitter, I like to call it Twitter because I'm a boomer, this will affect you directly. The platform is preparing a very aggressive anti-scam system. So if your account talks about crypto for the first time, it could get locked immediately. So like now on one hand, this could stop a lot of scams. Of course, we know crypto is full of scams, we know that. But on the other hand, it might also lock out normal users. So we're going to look at both sides because this is a big shift in how platforms control content. After that, we'll move to South Korea. And this is one of the most underrated stories right now because their crypto market is going through a major shift. One of the biggest exchanges is being restricted and liquidity is moving. And what that creates is something very powerful, which is information gaps. Like we talk about the kimchi, basically the kimchi gap a lot. Of course, we're going to dive in a little bit more, like meaning local traders see moves fast. Global traders would react later, and that creates opportunities. And we will show you exactly why this matters because there is a lot of money being made from the Korean market. Then we zoom out to a much bigger topic, Bitcoin versus quantum computers. This is not short-term news, like this is very much long-term risk. We are talking about a future where machines could potentially break Bitcoin security, and developers are now racing to fix it. So this is becoming like a real question we have to ask, like, can Bitcoin upgrade fast enough and before the technology catches up? And finally, we are going to end the show with something you guys always ask for, which is the Bitcoin charts. Like, where is Bitcoin heading to right now? Sitting at 69K. Like, are we going up or down? So basically, a lot of noise in the market. So, like today's show is going to be a very interesting one. We have to understand the big picture because right now markets are being driven by geopolitics. by technology shifts and structural changes in crypto. And if you can connect these dots, these pieces together, guess what? You're staying ahead of most of the traders in the market. So if you want to understand not just what's happening, but why it matters for your money, make sure you stay all the way through till the end of this segment. So without further ado, let's dive into the first news of today. So we are starting with the Middle East because right now the situation is confusing everyone and markets are reacting in real time. So what's happening here is that on one side, the US is setting a deadline. On the other side, ships are starting to move again. So the question is the war escalating or de-escalating? Well, the answer is a little bit of both, actually. So it depends on towards which country, I would say. So, of course, let's start with the latest from the US. So Donald Trump has made it really clear if the Strait of Hormuz is not fully reopened by Tuesday, the US could take major military action. We are talking about possible strikes on infrastructure. At the same time, the US is increasing military pressure in the region. So that's one side of the story. Basically, pressure between US and Iran is actually going up. It's not de-escalating. But here's the part that is very, very confusing. Even with all these threats, we are seeing ships pass through the strait again. So this is news from 2 or 3 days ago, depends on your time zone. So like France ships have gone through, Japan ships have also gone through, and Iran has even given Iraq a special exemption. So that means Iraqi oil up to 3 million barrels per day could start flowing again. So what is going on? Simply put, the strait is not fully open. Like Iran is not giving up control. Instead, Iran is doing 3 things at the same time. So first is to allow limited ships through, and then second is to choose who gets access, and then third is to use it as leverage in negotiations. So this is not peace we're talking about. This is actually a strategy from Iran's side. Now, let's connect both stories together. So on one hand, we have the US applying pressure. On the other hand, we have Iran like responding, of course, but not fully giving in, especially when it comes to Strait of Hormuz. So instead of reopening everything, Iran is opening just enough to ease global pressure, enough to avoid total escalation or keep some oil, a little bit of oil flowing in the market, but not enough to lose control of the strait and to give the US a full win. This is what we call a controlled de-escalation. Now, here's the most important part. Like Iran is not just allowing ships, they are controlling the system. So a report is saying like ships may need to pay to pass through this really straight, narrow bay. Rules depend on which country you are from. Friendly countries will get easier assets. So the strait is becoming not just a trade route, but a political and economic weapon. This explains what we're seeing in the market. So on one hand, like war risk is definitely high. US threats are very much real. Like let's see if Donald Trump gonna chicken out again. On the other hand, oil is starting to flow into the market a little bit, like supply pressure is slightly easing, though the price is very volatile. So there are big swings in oil prices. At one point, it was like reaching $120 per barrel on Brent crude oil. Right now, we're sitting at 109, like close to 110, which is still quite expensive if you ask me. So anyways, we're seeing big swing in oil prices. We are also seeing big swing in the stock market, like in the S&P 500, and constant volatility. Because like if we actually hop onto the trading view, we take a look at the S&P 500, like we have been correcting quite significantly. So if we zoom close to the day, the weekly chart, we have been on a downward movement. So 1, 2, 3, 4, 5. So 5 consecutive downward movements. So that was like pretty much when the war escalated. That was like a huge dump in the market in S&P 500, though it's recovering a little bit today. So definitely constant volatility because the situation is not clear. And everyone is still very concerned. Like just because ships are moving today does not mean they will move tomorrow, because everything depends on US decisions. It depends on Iran's response and military developments. If the US follows through on that threat, the strait could shut down almost instantly. So if we step back for a sec, if we take a look at the actions between these two countries, like it's not contradiction, it is negotiation happening in real time. The US is using military pressure, Iran is using control of oil supply. Both sides are testing each other, and the Strait of Hormuz is the center of it all. So the simple takeaway here, the Strait of Hormuz is not fully closed, and of course, it's not fully open. It's being controlled very carefully by Iran. The US is pushing for a full reopening. Iran, on the other hand, is allowing partial access on its own terms towards these friendly countries of Iran. And until one side gives in, the tension will continue to go up. And of course, that will ripple through the market, including crypto, including Bitcoin. All right, so that's for geopolitics. Let's shift gears a little bit. I do want to dive into AI, because there's this new trend going viral on GitHub. So it's called turning your work into skills that AI can copy, and it's absolutely exploding on GitHub right now. So what's happening here is that there is a uncomfortable truth, uncomfortable idea. The better you work, the easier it is for AI to replace you. So what's happening right now is that across social media, people are talking about something called Corley.skill. So Corley.something.skill. The idea is simple. You take someone's work, for example, their documents, their messages, or their decision-making process, and you feed that into AI. Then AI can copy what they think, how they write, how they make decisions. So instead of replacing jobs randomly, AI is now copying specific people. Now, here's the part that makes people uncomfortable. The people most at risk are actually the most hardworking ones, the ones who write detailed reports or explain their thinking very clearly and basically document everything. Because of that, becomes perfect training data for AI. In simple terms, the more clearly you explain your work process, your thinking process, the easier it is to turn you into a system. So let's break it down simply. Like modern companies run on tools like Notion, on Slack, or internal documents. Everyday workers are writing plans, decisions, and discussions. Like all of this is stored over time. Like over time, it becomes a full record of how you think. And that's exactly what AI needs. Like AI does not just need answers, it needs a context. It needs to understand why you made that decision, what trade-off you consider, and how you think under pressure. And all of that is already written down. Now, here's the bigger picture, because in the past, your knowledge lived in your head. Now your knowledge lives in the systems. Like that means it can be copied, it can be trained on, or it can be reused. So your experience is no longer just yours. It becoming basically data, free data for AI to copy you. Now let's be fair. AI can copy what you write, but it cannot fully copy who you are. Like there's something called texted knowledge. What that means is that the things you know, but you cannot explain. For example, if you have gut feeling about certain things, like you have experience about your job, timing wise, or human judgment, a senior worker may look at something instantly and they know, okay, there's something wrong. Maybe that's the gut feeling for a senior person they can identify. So in other words, like the stuff that you can't fully explain, more like your intuition, that part AI still struggle to copy from a human being. So here's where things get even more interesting. Like once AI starts doing the work, it starts creating new content. Like that content is then used to train more AI, and over time, something strange would happen. Like the outcome would become more generic, more repetitive, and less human. This is what researchers call model collapse. The system slowly loses originality. So if we step back for a sec, this is not just about layoffs. This is about how work itself is changing. Like we are moving from humans doing the work to humans are training system to do the work, and sometimes without even realizing it. Okay, now let's bring this to the key question. Like what cannot be turned into skill? So something .skill on GitHub. So the answer I would say is real-time judgment, creativity, emotional understanding, like that gut feeling you feel, especially as a senior compared to a junior, that junior would follow the pattern exactly, would have to explain the thought process. Like senior would have that gut feeling, and maybe communication with another human being that is really difficult to replace by AI. Because these are not fixed, like they can change depending on the situation and they cannot be fully written down. And Elon Musk did say, sorry, I didn't pull up the news here, but like Elon Musk did say, like in the future, most of the human will be replaced by AI. So most of the GDP from different countries will be produced by AI. So in other words speaking, his future kids, like they don't even have to go to universities to learn any hard skill. Mostly maybe focus on creativity or soft skill. But he did mention that his kids, if they want to go to university, they could go. But like, it's absolutely not necessary in this day and age. But like, I mean, culturally speaking, people like to have some certification just to prove something. But like, I wouldn't rule out university if you ask me. Like, if I have kids in the future, like I want them to go to university as well. But like, it's more like an experience and get to know networking and building up that communication with another human being. Less about learning the hard skill, if you ask me. So the bottom line, key takeaway here, like simple takeaway, like AI is not replacing jobs, it's learning from us. And the system is already being built using the data we create every single day. But at the same time, AI is still only a snapshot. Like it can copy your past, but it cannot fully become your future. So the real question is, are we doing the work that can be copied so easily, or are we doing work that keeps evolving? Because in this new world, that difference matters more than ever. And that's why we're paying close attention here on Roxton TV. All right, so we'll take a short break from here. When we come back, we are diving into how hostile X is becoming towards crypto, because like a lot of account got shadow banned or even locked immediately. So that is very concerning, and especially me as a crypto content creator. So like, if you're intrigued, make sure to stay around after the break.
This is Alex. Alex spends most of his time thinking like a trader, still deciding what to do with his Bitcoin. While Alex waits for the perfect entry, this is Laura. She's watching the S&P drop. Everyone is suddenly a macro expert. She doesn't panic. This is Tom. No screens, no noise, no stress. While Tom focuses on his swing, his Bitcoin focuses on compounding. Because Bitcoiners don't want more dollars. They want more Bitcoin.
I want more Bitcoin.
The best move is letting your Bitcoin work while you plan the next one. Grow by Roxum. One currency, one place.
Oh, I forgot to mention, dividends on Roxum are paid in Bitcoin. Stretch your income, 11.5% paid in Bitcoin.
Stretch your income to 11.5, get 11.5 in Bitcoin and Roxum. 11.5%. 11.5%.
All right, guys, welcome back to Roxum TV, and thanks for sticking around with us after the break. We're now going to dive into X, because like if you use X or Twitter, like this update could affect you directly. The platform is preparing a new anti-scam system that is very aggressive. Like if your account mentions crypto for the first time, it could get locked immediately. So what just happened is that according to X, product team specifically speaking, they are building what they call a scam kill switch. How it works is that if an account has never posted about crypto before and suddenly starts posting about tokens or airdrops or wallet links, the system may flag it as high risk, and then the accounts will get locked until the user completes verification. So there's actually a post from Nikita on X. So they're saying, so actually is replying to someone else. So yeah, I got fished. Like you can listen to exactly what happened here. Basically, Nikita is replying to, okay, account price of $4,000. If you can buy it, we can make a deal. So Nikita replied, yes, they are aware of the situation. We are in process of implementing auto locking and verification. If a user posts about cryptocurrency for the first time in the history of their account, this should kill 99% of the incentive, especially since Google's not doing anything to stop the phishing email. So that is the exact tweet. He tweeted about this on 1st of April, literally just a few days ago. All right, so like, to understand the problem, like if you guys have been engaged with, if you guys use a lot of Twitter, then you might know. Crypto scams on social media are everywhere. And the most common trick is like, for example, like hackers take over a normal account, then an account that people would trust. Then they will start posting about fake giveaways, fake tokens, and scam links. And because the account looks real, people fall for it. And X is trying to break that pattern. If a normal account suddenly talks about crypto, that would be a red flag. And this is important, like X is not targeting all crypto posts. They are targeting a very, I would say, specific situation. So when there's a clean account, suddenly becomes a crypto account, because that is exactly how most scams happen. So the goal here is quite simple. Stop hackers right at the moment they take over a certain legit account. So according to the team, this could remove most of the incentives for scammers, because like if hacked accounts cannot post crypto content, then they lose their main tool. Like there is no promotion involved. There is no scam links, no fake token hype, etc. So, however, like there is still a problem if you ask me. Like that's the other side of the story. Like this system could also affect normal users, like let's say you have never talked about crypto on X before, and one day you post something like, oh, is it a good time to buy Bitcoin, BTC? Then that will trigger the system and your account will get locked, even though you did nothing wrong. So now we have a big question: security versus user experience. On one hand, like, sure, this could stop some scams from happening. On the other hand, it could create friction for real users. Like, some people are already worried this feels like, okay, lock first, lock the account first, and maybe ask questions later, ban everything. This again, it touches something deeper, like, because Elon Musk has always talked about free speech. He talked about open platforms, but this system is so controlled in its own way. Like, he assumes, okay, X assumes risk first and verifies later. So now people are asking, can we have both? Like a safe platform, but at the same time, freely open one? Because like this could also change how crypto spreads online. If new users feel restricted, they may hesitate to talk about crypto at all. And that could definitely slow down discussions, slow down adoption, and new user entering the space. So while this helps security, it may also limit growth. And from what I know, being in crypto for a few years, seeing different narratives, I know this would definitely kill a lot of crypto projects, and especially if we are in a crypto winter right now. Like all these, I would say crypto marketing rely heavily on X. They're doing a lot of digital marketing, all these campaigns. So this is where they live. The almost, I would say, solely platform, social media platform, that is the number one for crypto projects to exist. And right now, that platform is not being so friendly. So it's going to be a very difficult time moving forward for crypto projects. Bitcoin, I'm sure, is going to be okay. We're still waiting for X money to be fully launched. We still don't know the details yet. But I believe like Bitcoin will be okay. But crypto projects, especially from my own experience, seeing all these scams and 99% of the altcoins were bound to fail, then yeah, I mean, I'm losing my hope in crypto as well. That's why I am focusing more on Bitcoin these days. All right, so let's shift gears a little bit. I do want to dive into South Korea because, like, this is not just a local exchange story. Like, this could affect how crypto prices move globally, and most traders outside South Korea may be underestimated. So, what happened is that South Korea's second largest crypto exchange, being Bithumb, has been hit with a 6-month partial business suspension. At first glance, this sounds like a normal compliance story, something like regulation, AML rules, exchange cleanup. But this is much bigger than that, like, because in South Korea, the crypto market is very highly concentrated. Upbit and Bithumb together control about 96% of the market. So when Bithumb gets restricted, this does not just hurt one company, it changes the whole market structure. And South Korea is not a small size market at all. Like, trust me, I've talked to a lot of investors or traders from South Korea. Their mentality is really decent. So if they have $100, they will bet like $112. They will take on leverage, excessive risk for no reason. So South Korea is one of the most important crypto markets in the whole world. Like the Korean won, the local currency, is one of the biggest fiat currencies used in crypto trading. And a very large number of adults in South Korea own digital assets. So when something this big is happening locally in South Korea, of course, price signals can move really fast. But here's the problem. Global traders often react late. The reason why is because there is really a strong language barrier in South Korea. Not a lot of people will speak English. There is capital control. There is like local needs moving fast in the Korean market, but like English media would only catch up later on a later stage. That creates a huge gap. Like that is an important gap, and that gap creates opportunity. Like this is the key idea. What happens in Korea often hits the local market first, then only later spreads to the global market. That means local traders can react much faster, and outside traders, they often only notice after the move is already over. So this is not just a Korean story. This is a structural information gap. We have already seen how extreme it could get. So if we hop onto this chart, it looks very scary. So like in late 2024, when political tension hit South Korea, Bitcoin on the local pairing, so on local Korean exchanges, dropped 30%. But globally speaking, Bitcoin only dropped 2%. So you guys see the huge gap, right? So at the same time, stable coins lost the pack locally, and many altcoins traded at massive discounts. That wasn't just volatility. That was a local market shock. And the people who understand Korean news first, of course, they will have an edge. Now, let's bring it back to Bithumb. Like when one of the two major exchanges in Korea gets hit, liquidity starts moving to the other one. Like that means like more power flows to Bit. And when liquidity becomes too concentrated, price discovery gets weaker. The market becomes less balanced, and extreme price moves become more likely. So in February 2026, like Bithumb actually had a major operational mistake. Like the exchange accidentally credited users with a huge amount of Bitcoin, and that caused a flash crash in Bitcoin versus Korean won of about 17%. And that event showed something very important. Like when the market depends too much on one or two platforms, like even one mistake can trigger chaos. Now, I mentioned that in the intro of today's shows a little bit. So let's talk about something many traders have at least heard of, which is the kimchi premium. Like the first time when I heard of this term, I thought it was some racist term, but apparently like Korean people have been calling that a kimchi premium as well. So like this is the price difference between crypto in Korea and crypto in global market. Many people think this is just about retail hype, but it's not that simple. Like it is also a signal of capital friction. In other words, it shows how hard it is for money to move in and out of Korea. So this premium is not just emotion; it's a sign of pressure it's a sign of pressure in the system. The premium usually it will never goes to zero. Like there is often a structural flaw because capital controls remain in place. That means the premium is telling you more than just sentiment. It's telling you how local capital pressure is changing. And when that premium starts shrinking or shrinking fast, it can be an early warning sign. So with Bithumb under so much pressure, this premium may be harder to reach, like because the market is becoming less competitive. If the price discovery becomes weaker, then signals will become less clear. That means the next dislocation may be harder to predict, faster to happen, and more damaging when it comes. Now, here's what makes this even more interesting. Like South Korea's government has been seen as a more crypto-friendly government. Like that should bring in more institutional interest, right? But at the same time, retail infrastructure is getting so tight. So we have two forces happening at the same time. Like on one hand, we have more political support for crypto. On the other hand, we have more pressure on the exchanges retail users depend on. So that creates instability. And historically speaking, instability creates trading windows. So what should traders be watching here? Like if you guys are interested in trading this, personally, I'm leaving this out because like a lot of my Korean friends, I know they have been trading this information, but like based on Bithumb, it's not just a suspension itself, but the bigger structure around it. So if you want to trade this, like you have to watch how fast liquidity moves to upbid, from Bithumb to upbid, how Korean prices behave versus global prices, so the premium and also the kimchi premium changes over time, and whether local political or regulatory news start moving the market again before the rest of the world notice. Because if information keeps moving locally first and globally later, then this gap will continue creating short but very powerful trading opportunities. And that's why we find this very interesting, and we have to break this news here on Roxham TV. Anyway, so we will take a short break from here. When we come back, we're diving into Bitcoin because like a lot of viewers, that's why you're staying here for, right? So we're looking at Bitcoin versus quantum computers. That is a huge risk, basically. And some say it's a long-term risk, but the risk could come as soon as 2029. So that means only like 3 years. 3 years left. So we have to talk about it. And of course, like if we should be concerned for the Bitcoin network or even for owning Bitcoin. So if you're intrigued, make sure you stay with us after the break.
This is Alex. Alex spends most of his time thinking like a trader, still deciding what to do with his Bitcoin. While Alex waits for the perfect entry, this is Laura. She's watching the S&P drop. Everyone is suddenly a macro expert. She doesn't panic. This is Tom. No screens, no noise, no stress. While Tom focuses on his swing, his Bitcoin focuses on compounding. Because Bitcoiners don't want more dollars. They want more Bitcoin.
I want more Bitcoin.
The best move is letting your Bitcoin work while you plan the next one. Grow by Roxham. One currency, one place.
Oh, I forgot to mention, dividends on Roxham are paid in Bitcoin. Stretch your income, 11.5% paid in Bitcoin.
Stretch your income to 11.5, get 11.5 in Bitcoin and Roxham. 11.5%. 11.5%.
All right, guys, welcome back to Roxham TV, and thanks for sticking around with us after the break. We're now diving into the Bitcoin story we have to cover. So there is rising concern between like Bitcoin versus quantum computers. So let's talk about this, like because this is one of the biggest long-term threats for Bitcoin. Right now, it's no longer just theory. It's starting to become very real timeline, I would say. So what just happened is that this week, we have new research suggests that a powerful quantum computer could actually break Bitcoin security. not in years, but in minutes. So according to the research, it could take less than 9 minutes to crack Bitcoin's core cryptography. So now, if we think about that, a Bitcoin block takes around 10 minutes. So that means in the future, a quantum machine could break the system faster than it processes transactions. This is a big deal. Like Bitcoin security is built on something very simple. So a private key and a public key. You prove your ownership by signing with your private key. And today it's basically impossible to reverse that. It would take normal computers billions of years, but quantum computers would change that rules. Like they can turn this one-way system into two-way system, meaning they can take your private key, reverse it, and get your get your public key, reverse it, and get your private key. Once that happens, they can steal your coins. There are two main risks here. Like first is the long-term exposure of BTC. Like some Bitcoin addresses already expose their public keys. That includes early wallets, even coins linked to Satoshi Nakamoto. So around 1.7 billion BTC could be very vulnerable this way. Second is short exposure. Like when you send a transaction, your data sit in something called a meme pool. So that's like a waiting room. During that time, your public key is visible, and a quantum attacker could try to crack it before the transaction confirms. We are talking about millions of Bitcoin worth hundreds of billions of dollars. If even a small portion of that gets hacked, it's not just about losses. Like if it hits trust, it also hits like the core idea of Bitcoin, which is to trust the code completely, no central authority, and being secure forever. And that's why developers are already racing to fix it. Now, here's the important part. Like this is not being ignored. Quite the opposite is happening actually. There are multiple solutions being explored. Like one idea is quite simple. Like there are multiple basically proposal right now. Like one idea is to like if attackers need the public key, then maybe just remove it. There's a proposal called BIP 360 that would stop public key on chain. So there is nothing for a quantum computer to attack it. This would protect future Bitcoin, not the old coins though. And right now, solution number 2 is something called, so Bitcoin uses ECDSA at the moment. That's what quantum computers can break actually. So developers are looking at a new system. So a new system called SPHINCS. I don't know how to pronounce that. These are called post-quantum signatures. They are much harder to break. So however, there's a trade-off. They are much bigger in size. That means more data and higher fees and slower network. So it's not a perfect solution just yet. We have like other solutions being suggested. There's a third one. This is like adding a protection layer. Like so, instead of sending your full transaction immediately, you first send a hidden version, then later refill it. So even if a quantum attacker sees your data, they cannot act faster than your original transaction. So think of it like a timestamp proof. And fourth solution, like there's an interesting one, like developers know some coins are already exposed. So instead of stopping attacks completely, they want to slow them down. Like for example, they would like limit how fast stolen coins can be moved, like allowing only 1 Bitcoin per block. This would of course prevent a full market crash overnight, but this is very controversial because Bitcoin is supposed to be free. No one should control how you spend your coins. Right now, quantum computers are still not strong enough just yet, so Bitcoin is still safe today, but the timeline is getting closer. Some estimates suggest around 2029. There's only like a few years left anyway. So this is now a race between two things, like quantum computer getting stronger and Bitcoin upgrading its defense. If Bitcoin upgrades first, the network stays secure, of course. Like, however, if quantum computer wins first, we could see some very serious disruption. For everyday users, like this is not an immediate panic, but this is something to watch, like because over the next few years, wallet design may change. Address formats may also change, and same for network upgrades. And users may need to move their funds to safer format. The bottom line for this news is that quantum computing is no longer a distant idea. It's becoming a real engineering problem. Bitcoin is still safe today, but the clock is ticking. The clock has started. Developers are already working on solutions, but upgrades do take time. If Bitcoin doesn't come up with a solution soon enough, this could become the biggest security challenges Bitcoin has ever faced. All right, so speaking of Bitcoin, let's hop on to some chart analysis, a real quick one, because like honestly speaking, what I call this market is a kangaroo market, just like bouncing around these key range, basically very, very boring. Like some people would get very excited when Bitcoin pumped all the way to, wait, what was that? So 75K, that was back in mid-March. So of course I would assume closer. Let me know live chat if you can see my screen. So like, yeah, so we are starting with the daily candle of Bitcoin. Nothing very significant is happening. So like, of course, we have this like rising support that we've been building up. So we're building up attention, building up that support since 5th of February. And even if on the hour side, we're still hanging above the support trend. So in other words, speaking, like as long as we don't lose the bottom line on the Bitcoin price action, so we have this rising support, and same for the daily RSI. So as long as we don't close below this RSI, then this pump would likely to continue. Like, of course, this is just a more from a short-term mindset, since we are starting with the daily candle. But like if we have like a few 2 or 3 daily candles consistently closing below this level of support, then like forget about this, like this rally, like zooming out, this is just a relief rally, because like point being why we had this, because we have been too painful, we dropped too much. So if we take a look at the monthly returns of Bitcoin, like we have 1, 2, 3, 4, 5, so 5 consecutive red months. That has only happened one time in the entire Bitcoin history. So that was back in 2018, 1, 2, 3, 4, 5. So actually 6 consecutive red months. So like this time we have 5 months, 5 consecutive red months. In March, we closed with a positive number, 1.8%. I mean, thank you very much, better than nothing. But like, let's see if this relief rally can carry on. Well, based on the daily candle, like as I mentioned, like we could still consolidate inside, like we could pump all the way to 77K. But I have a hard time believing that we could stay above 77K. Yeah, maybe we could even, yeah, I mean, touch a week. I'm not sure if we could even close around 77K. Maybe it's just like a week of a daily candle, and then we quickly got rejected and go back to the previous level. And point being, the reason why I'm not having much conviction for this pump, I mean, it does look very nice. If we just take the channel from the bottom or from to the top, it's like 15%. Like they're just like bouncing around for 15%. So for traders out there, this is really nice profit. Like swing traders, 15% in just a few days or few weeks. So it's very generous, good money, I would say. But like zooming out, it still looks like another bear flag. So as the name suggests, of course, there's a bearish pattern. But like I put this rectangle, so this region, 77K to almost 80K, so 80K. So this region, there seems to be like huge support and resistance. So that goes back to the bear flag I was showing. Like we could pump all the way to 77K, but like getting into this region, like so this rectangle, I don't see any strength for this pump yet. It doesn't have the momentum, so that's why I'm not very optimistic. But like, if you guys into trading short term, there is still quite profitable trade you can make, because like this is how it works for trading. Like investing, you have the long term mindset. Maybe we're focusing on the weekly candle or even monthly candle, but trading wise, you can make money even if the market is going down, or you can just trade the volatility, like longing the market a little bit when it goes down close to this bottom line of the bear flag. All right, so let's quickly go to the weekly chart as well. So like as for the weekly chart, like as you can see, we're just like bouncing inside here. Well, actually, wait, not this one. Let's go to Bitstamp instead. So for the weekly chart, according to the 4-year cycle, I know like a lot of people are not a big fan of 4-year cycle, but the truth is like we have been following exactly that, but like people like to cherry pick something. And yeah, I mean, any previous cycle, we were in a, so cycle bottom to a cycle top, it takes 1,064 days. So that has been playing out in this cycle again. So judging from the 4-year cycle, we could see a cycle bottom on 5th of October. That is, of course, like one metric of looking at things. Another metric is like if we do the monthly chart. So we're using a even longer perspective, longer mindset to analyze where Bitcoin is possibly going. I do want you to focus on the RSI at the bottom. So what I've done here is that I've drawn 2 lines. So these 2 lines is, of course, the support of RSI, and we're looking at the monthly, right? So any cycles or the price history of Bitcoin. And if we take a look, like if we connect the bottom, we kind of get like a channel. So there's a gap, right? So right here. And obviously right now we are in April, we're still trading above this channel. Like point being, we still haven't bottomed out yet. It's not, the RSI is not low enough. Time-wise speaking, and also like price-wise speaking, it's not low enough. I do not believe this is the cycle bottom. Though like April, we might see some relief rally, but right now I'm still not sure if we could close with a positive April figure. But point being, how do you read this? Bitcoin RSI is not low enough. It has to go to this like a channel, this channel a little bit. And historically speaking, if we go to the channel and if we break above that resistance, so that was that happened in September 2015, and so did in February 2019. So like if I circle all the basically time period when we break above this channel, and if we go back to the price action, you will know that there happened to be an exponential growth, like whenever we break out of this trend. And it usually like it doesn't have to be like exactly the cycle bottom, but like it shows the momentum is finally strong enough to take Bitcoin to an almost up only month, consecutively up only months. So like right now, since we are looking at the monthly candle, like we still haven't dropped low enough, and then we might eventually find a bottom. And then we're going to trade inside a little bit before we have that exponential momentum, exponential growth again. So at least that's not what TA has been suggesting, and everything is pointing towards a bear market. So we still haven't found a bottom yet. So I'm afraid to break it to you. None of the charts telling me 60K Okay, we dropped to 60K. That was back in 6th of February. That was really painful, but like I do not think that is a cycle bottom. And there are key areas I'm watching. First one being $57,000, and then second being $44,000. Like, of course, no one has a crystal ball. Like, we don't know what's going to happen tomorrow. But like, this is just a rough estimate, like how I got these numbers, right? Like, if we take the length of the bear flags at the top to the bottom. So if we just like apply here to the breakup point, there you go. So boom, sorry, so here, so go to breakup point, then you would get like a $44,000 or $45,000. This is just a rough measurement. So that's why like no one can call the exact bottom. We don't have a crystal ball. At the end of the day, we're just making smart guesses. But like I've got like a bunch of buy orders around these key levels, and it does look like a good entry point around these levels. Anyway, so that was the quick price update for Bitcoin's price. But before we go, make sure to give us a follow on X. So like my personal X is gemcrypto_io. Make sure to give me a follow there. Make sure to follow Roxum TV as well, because we have news breaking out every single day, not just about Bitcoin, but global news, geopolitics, AI. So point being, there's so much valuable content you probably don't want to miss out. So here we have Coinsider. That was the interview I did like last week. Very valuable content. And Coinsider, Kevin himself is really knowledgeable. If you haven't checked out that interview, I highly recommend you check that out. I'm sure you're going to learn a thing or two. So anyways, that's it for today's show. For tomorrow's show, I'm still going to do the live at home again because it is Easter holiday, so the studio is taking a little break. So make sure to give us a follow, subscribe to YouTube channel if you haven't already. Make sure you subscribe both channels, so being Roxum TV YouTube channel and also Champion Crypto YouTube channel. Same time tomorrow, so 3 a.m. Eastern time, and I'll see you guys tomorrow's show.